I'm about to save you so much money shortly thanks to this one single video, so that you don't have to waste your money behind all these fake gurus or scammers that are trying to sell you things about smart money trap. Will you believe me if I say that smart money trap is something that has always been there, but nobody has ever spoken about it? Because they never knew in first place what was even an inducement. Now that they know it, they feel that they have discovered smart money trap, which is the biggest lie ever. So in this video, I'm going to show you guys step by step everything you need to know on how to spot your smart money trap on the chart. Let's get started. So I really needed to make this video for you all because first thing first, I wanted to share, the most valuable information as I can with you all. And secondly, I'm so tired of seeing all these BS of people trying to upselling you things that already existed, as I already mentioned on my trailer, right? So now what is happening lately is that obviously if you guys been watching a lot of YouTube videos and things on social medias, you must have realized by now that one of the hot topic currently going on around is about inducement, right? Inducement trading, because smart money trap was born literally after the inducement concept has been introduced in the market. Okay, otherwise before that there was no such thing as a smart money trap, and now of course because of the inducement concept, everyone is so focused on this saying, oh, smart money trap, smart money trap. But in reality, as I say, that has already existed, and today I'm going to prove you everything on the chart. So when exactly you guys see the smart money trap happening, I want you guys to think about this properly, because every time, if you've been following me or if you're new on the channel, I always say to you something very important, which is every time that someone shows you a concept, you need to ask yourself always the right question, right? You have to always ask yourself the why, the how, the when, and the what. All these questions, if you can answer to all these questions, sorry, my handwriting is not the best, but you're listening, hopefully. If you can answer all these questions behind a specific topic, right, then you can say that that topic is worth backtesting, or that topic itself is worth following about, right? So you can try to see what's going on the chart and trying to collect data in order for you to get the answer that you're looking for. But if you get a concept, someone is talking about a concept, and you are not even capable of saying why that happens, when that happens, what that happens, right? Don't even bother wasting your time behind it. And that's exactly what I say every time on my channel. And that's exactly why I show you every time on my channel, explaining you step by step all the time, all this stuff. So now today I'm going to be doing the same. So check this out. This is something that you probably have already seen, and a lot of people pictures or videos on social media, right? So you might have seen that price is going bullish, and they mark this zone as smart money trap, and they say, okay, this is gonna be burnout, and a lot of smart money traders are gonna be losing the trade because they might gonna see an order block over here, right? And then as soon as they try to take the trade, they're gonna get taken out, and then price just keep going to the downside. Okay, so this is one type of variable. I already placed few variables over here because you're gonna see a lot of variables. But long story short, when you understand the basic narrative of this, you will know how to export exactly all of this on the chart. Okay, so then let me take you to the next one, which is very common again, this one. Now this is something that is very, very, very advanced and is very difficult to grasp if you don't understand purely the logic of the way on trading your liquidity concept. Okay, but again, it's not like something magical or something crazy, because this is something that I'll show you again on the chart as well, right? This is something very common that happens as a moment trader. Again, you see the order block, you try to take the trade, you get burned out, and then what happens is that people classify this as well as a smart money trap, and then they get burned out over here as well, and then price goes on your favor. And then thirdly and fourthly, so this is a bit personal, this one over here, I'm gonna leave it for the last. But then you got this one where you got like the order flow, right? You're following the order flow. You're like, okay, I'm selling because I can sell over here, I can sell over here, and I'm going to sell over here. But guess what? Right when you're about to take the trade, because you see the order flow is going down, you get burned out, and this becomes your smart money trap. This is something that, guys, I swear it pissed me so much, because it's something that I've seen from someone that I used to admire a lot. But when I've seen the way they're upselling this concept now, it literally, I was like, oh boy, I can't believe it. How low people can go just because they want to sell their mentorship or they want to sell their courses. This is something that I personally want to show you as a last point, because it's something that need to be talked about, and it's something that you're gonna see so much on so many traders chart graphs telling you that, okay, there is liquidity over here, that gets taken out, right? Classic smart money concept. Then price breaks the structure, right? So people try to short from here because they want to see price going down. Why? Because price have taken liquidity, but the next thing you know, you got burnout, right? And then this becomes, this is basically a smart money trap. But again, this is the biggest lie ever. So let's jump on the chart and let's start identifying every single one of these on the chart and understanding why they are the smart money trap. But before we move slowly there, okay, let's start with this one, right? So before we slowly move on that one, I want to ask you something. When exactly do you guys think that this pattern can happen? Okay, just think about it. I'm going to give you a few seconds to think about it, okay? When, based on your experience, whether you're a newbie, a pro trader, or a specialist, whatever you are, when do you guys think that this can happen and how you can figure this out? I'm going to give you some tips. Tips number 1, supply and demand. Tips number 2, time frames. Okay, why these two are important in order for you to identify this. Now let's start with one by one. So let's start with this one first. Let's go to the chart. So now over here, all right, let's say, yeah, let's do this price action over here. I think that should help you a lot. Okay, so I'm gonna take this one. So I'm gonna cancel all the way down here. Then I'm gonna go to M1, right? Now, because this is the lower time frame, everybody trading the lower time frame, everybody nowadays love this lower time frame whatsoever, right? Now, let's start from somewhere around here. Okay, so what can you see on this chart? You can clearly see the price is going low, is it going higher, is it going lower, is it going higher, is it going lower, is it going higher, and then is it going down? Now, when price start going higher, somebody will be like, oh, I'm taking the trade, because that's exactly what the order flow is telling me. The order flow is telling me it's going higher, right? So this, look at this. This is the classic setup, like very, very classic and very clean setup. Actually, look at this. Why? Because you can see that there is an order block over here. You see this order block? And then there is a engulfing afterwards. Price breaks the structure to the upside. On the top of that, price has also taken liquidity, right? You can see the price takes liquidity, makes the order block, breaks to the upside, and the next thing you know, you will be going for a buy because you are following the order flow. What is the order flow? Low, high, low, high, low, high. So you take a trade from over here, and then what happened? The next thing you know, you already seen it, guys. Anyway, you take the trade, and then boom, you get burned out. Your trade get literally taken out. Wow, how come? What exactly happened? Again, while I'm explaining this to you, I want you guys to follow the lead, like follow what I say to you, giving you the hints, which is the time frame and the supply and demand. Okay, now let's do one more time. So if you see over here, what can you see? Exactly the same things. Look, check this out. All right, we have from this one over here, you can clearly see the price been going bullish. So you have high, low, comes all the way here. The order flow is beautiful. Everything seems clean, smooth. Over here again, price breaks to the upside, and then bump, crashes down. If you are trading smart money concept, you will be probably trying to take a buy over here, buy over here, buy over here, buy over here, and then a buy over here. But then again, try to take the buy because of the demand over here. Price breaks to the upside, and then you get burn out one more time. And then lastly, sorry guys, if you follow me, I show a lot of example, but that's the way that will help you to click a lot. So how come you have failed over here? How come you have failed over here? And how could you have avoided that? So now we're shortly going to the answer. I'm going to give you a few more seconds to think about it, but I guess by now, if you've seen the whole price structure, you will have realized why did that happen. Okay, so check this out. This happened because a lot of traders, they fail to understand that they have to always pay attention to what happens to the left. So now, yes, when I was over here, right, I was telling you, oh, look at this order flow, high, low, high, low, high, low, boom. You take the trade, you get burned out. But then if you look to the left, right, what can you exactly see? You can see that the order flow to the left is completely bearish, right? That's why I told you guys the time frame, because I'm watching M1 over here, but the order flow to the left is M30, M1 hour, whatever. It's definitely something bigger than M1. So if I don't look to the left and I keep following the order flow and trying to take a trade from this beautiful clean order block, because you can see that has taken liquidity again, order block clean, imbalance, whatever, break the structure, momentum, blah, blah, blah. But then it fails. Yes, exactly, fails because price has already reached, what did I say? The two hints, time frame and supply and demand, isn't it? Price has reached an important supply zone, which is this box over here, right? You can see the price has already tapped. So therefore, what I'm expecting now is that price is not going to hold in here. Are you guys following what I'm saying? Now, you might be saying, yeah, but this is M1. No, this is something that applies in any damn time frame. That's why I always stress out saying to you guys how important time frames are on the chart. Because just following this, like for example, look at this. Here, right, I've shown you this order flow, right? High, low, high, low. Now, before you even take this trade, so let's say you are looking for this because now you see the bullishness coming in the market. You try to take a trade over here. You have to first of all look to the left and ask yourself, what's going on to the left? Is it right for me to take a trade from here because I see a break of structure to the upside? And guys, trust me, this applies in any time frame. Okay, I'm going to show you in a higher time frame if you want it. But then that's the question you should be asking, because the reason why this failed over here, can you guess why? Yes, exactly, because this is probably the same that happened over here as well. So you can clearly see that we have another big order flow over here, right? Price comes down over here, and then the next thing you know, price steps to the supply zone. So we reach the target, the ultimate target of the higher order flow, and then after that, we just smoked through it. We broke it. And of course, this is what is gonna happen all the time, right? So every time that you see people showing you, let's go to my drawings, right? Every time you see people showing you this type of pattern, sorry, where are the patterns now? One second. Okay, these are the patterns. One second. All right, we've seen it. So every time you see this and people lay them out saying, oh, this is a money trap, the first thing you should be asking yourself is, when this high comes here and this breaks, where exactly this high or this low, in this case we are doing the buy side, right? Where exactly this one is tapping to? Because if this break to the upside has already reached an important supply zone, or if the chart was the other way around, so let me flip the chart. So let's say this one, you see, if this was the demand, so this is a sell scenario, then of course I do not expect this to hold anymore. Of course this becomes my smart money trap, right? Because the order flow is not going to hold. Because if this one over here is a demand of 30-minute, 1 hour, 4 hour, and this is my order flow 15-minute, this is going to get smoked through, okay? Like 90% of the time. Now, let's move to this one. What the hell is exactly this one? Okay, this is a bit advanced, but again, I'm going to show you the basic example of this one. So this time to happen all the time when you see, okay, let's go back over here. Let's see if I can find actually some clean example for you all. So let's go back over there. That patterns usually happens when you have a break and retest scenario. So if we go to M1, right, M1 over here, right, here we go. So now you can clearly see, okay, here we go. That's a very prime example. Look at this. Price breaks to the upside. What happens next is this. So price breaks to the upside. It tests right over here, then goes higher. It grabs the liquidity to the downside, and then it keeps going to the upside. Now, to be honest with you, okay, this is very advanced because this one, for example, if this comes over here, high, low, high, and it breaks to the downside, what I'm expecting next, and again, this is a lot of people will be like, oh, this is smart money trap. Yeah. But on the other side, if you think about like price action wise, when price goes up and it goes down and it goes up, right? I know that this move requires a retracement, isn't it? So how do I know that this requires a retracement and when exactly that happens? When the internal order flow gets broken. In this case, this is the scenario. So if that happens, then what do I expect? That price tests over here and then it goes down to kind of retrace somewhere around here to keep going higher above. But guess what? Many times, unfortunately, what happens is that price breaks to the downside. It shows you the intention of retracement, but the fact that the momentum is so strong, this fails to give you the retracement. Therefore, you have this called liquidity wrap to the downside, and then price shoots all the way to the upside, right? Look, the same things happen all over again. Like literally, the very next example is the same thing. Now, look at this. Breaks the structure over here, right? The same things again. Now, here, this structure gets broken, right? Can you guys see that? You can see that oh shit, sorry. Oh, sorry. What happened here? One second. Okay, so you can see that this gets broken over here, right? Then what happened is that the momentum is so strong. Again, one more time, price taps over here. It goes up. Now it breaks to the downside, so you know that the retracement is coming ahead. But just because the momentum is so strong, it's not allowing that retracement to happen. Therefore, price does what? it goes all the way up there. And again, a lot of people, when that fades, this high fades, that will come to you, be like, oh, this was smart money drop because this was a liquidity grab, but we need to go higher. Again, the same thing over here. This was a liquidity grab and we needed to go higher. Yeah, when you see that on hand side, like you'll be like, after that happens, you'll be like so good on saying, oh yeah, because of this and that, blah, 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 whatever. But I can tell you that is not always the case. Because if the momentum is very strong, this kind of scenario happens many, many times. So before you take even a counter trend, right, you need to always pay attention to the momentum to the left, which is this one. You see this one over here, the same thing. Momentum very strong, low sell side coming over here. Price breaks above, again breaks below, but again, it just doesn't play out. And the same thing, like, is always every single time you're gonna see this happening on your chart. Okay. So don't bother too much on that, because the only way you shouldn't, first thing first, you shouldn't be even taking a sell over here because it's a counter trend. So what you should be doing instead is that as soon as you see price going up, it's going down, it's going up, breaking to the upside, breaks to the downside, you have to wait now for price to reach over here somewhere, break the trend again, which is this one, trying to take the trade, and then just going with the order flow. That's what you should be doing. So don't bother on taking trades over here and then be like, oh, I got trapped in this smart money trap. No, you didn't get trapped anywhere. You just took a trade that you shouldn't be taking. And even if you take it, which is not wrong, again, which is not wrong, right? You need to be cautious, because if the momentum is strong, you shouldn't be even selling from over here. Maybe this one is a bit confusing for you guys, I know, because it's very advanced, but if you rewatch this bit a little bit over and over, I can tell you that it's gonna start clicking on you, and then you're gonna be understanding, okay, what actually is happening over here, right? Now, this being said, let's go now to the next one. Which was it? Let me see. Let me go over here, drawing. I'm sorry, I shouldn't have done the drawings that far, but yeah, anyway, whatever. By the way, guys, let me tell you something. If you made it so far and if you're still watching, this is something I actually never ask in any of my video, but I'm just asking you now because it's the minimum I can do, literally. If you guys love it so far and you liked it, please guys, like the video, leave a comment on the comment section below, whatever, because apparently it helps a lot with the algorithm on YouTube, and it will help my channel to grow as well, so that we can also grow together. Okay, so if you guys liked it so far and if you enjoyed the video, please leave a comment below. Even if it's a bad comment, it's absolutely fine. I don't care. Whatever you guys feel it, just leave it. That will be fine. And then, yeah, even a like if you want it. If you want to subscribe, fine. If you don't, then it's fine as well. It's absolutely fine. I just want you guys to take away the value I'm giving to you. So hopefully you're not going to make all this mistake over and over and over again. Now, let's carry on. So before I move to this one, because this hands down is one of the most important one you guys need to know as a smart money trap, let's move to this one, okay? What happening over here? So this one is quite similar to this one, okay? However, this one happens somewhere else. So where exactly that happened? By the way, guys, I don't know if you have realized it. I've used only one price action, which is this one piece of price action, to show you all the type of smart money trap. So that itself should be telling you, right? What is this actually smart money trap? Okay, look at this. So that one there is a, okay, let me just do a bit of cleaning over here. Okay, a bit of cleaning over here. Okay, check this out. This is exactly what I was showing on my drawing. We have the order flow, high, low, high, low, high, low. Now, some people be like, oh, we had a stop hunt over here because price took out all this liquidity over here. You see these are equal, price takes it out, and then it breaks down here. Now I see the momentum is going bearish. And what I'm doing is that I'm taking a trade from over here, right? And then boom, you get smoked. You get burned out because price just went higher, isn't it? Now, why do you guys think that actually happened? Just think about it. I want you guys to think about it, right? Just think about it. Why do you guys think that happened? I'm gonna allow you to think about it a little bit, because if I keep, spoon feeding you and giving you all the information, you're not gonna be able to absorb that the way you should be, right? Now the same thing goes over here, right? You go, oh, look at this. This is very clean, right? You got this high, then make this low over here. It has taken all this liquidity to the left, and then you try to take a trade from here because you see price, okay, that has taken out liquidity. Oh, sorry. This one looks very, very juicy as a POY, but the next thing you know, you get burnout, price takes you out, and guess what? That's a fat stop loss. Okay, so if you guys have followed the first example they gave it to you, right, you should know that what you should be doing, which is literally what? Looking to the left and knowing the higher time frame. So what exactly, is this telling you if you look to the left? Let me show you this. If you look to the left and you pay attention to the order flow, what can you see clearly? You can see clearly that the order flow has been broken in a higher time frame. Again, guys, it's the same things all over again. That's what I'm saying. Do not listen to all these people telling you smart money trap. No, there's no such thing as smart money trap, because this for them is an inducement, right? And this becomes a smart money trap for a simple reason, because this price action you see over here with the liquidity grab, break to the downside, is a M1. And this is M30, 1 hour, whatever time frame we're looking for. And then price takes liquidity to the low, you know the price is going to retrace. Therefore, taking a random POY that has a liquidity grab and the break to the downside from M1, what do you guys think is going to happen? It's not going to hold, isn't it? Of course it's not going to hold. It's going to become a smart money trap. The same thing that happened over here as well. Why this is a smart money trap? Why would you bother on taking a M1, stop hunt to the upside, break to the downside, and taking the trade? Why would you bother when you know that in a higher time frame on the left we just made a new lower low? Therefore, what exactly is it we expecting? We're expecting a retracement. So if I'm expecting a retracement in M30 or 1 hour, I know with a high probability, not 100% guaranteed, but high probability, that most likely this one is not going to hold. Okay, and there we go. That's another smart money trap over there for you guys. I'm literally using a bit of price action over here, like this price action, to show you. I already shared with you guys 3 types of smart money trap, which is liquidity grab, break to the low, and it didn't work. Then continuation again, and it didn't work. Continuation again, and I gave you logical example, step by step. I'm showing you and giving you a logical example using price action why this type of order flow and order blocks are smart money trap. And just because it's happening over here, it doesn't mean that, oh, it's just here. No, it happens every damn where. Like if I zoom out a little bit over here, right? Look, let me show you this. If I zoom out a little bit over here, whatever price action you want to take, I don't know. Look at this. All right. Here you go. Look. This one. No, this didn't go higher. Let me see. I don't know. Okay, this order flow. Okay, yeah, check this out. So if we go in here, just literally a little bit to the left, right? Now, I don't have very clean price action over here, but you can clearly see that if this high gets broken, what you guys think is going to happen is a smaller time frame. There's not much of price action. But look, check this out, right? If I do this, and then I go over here, you can see go low, high, low, high, low, high, low, high, low. It comes over here. This is going to be in second time frame, whatever. You can clearly see that price breaks, right? It retraces, goes higher. If someone was going to take a trade over here, that will be, you see, that will be gotten taken out. And you guys remember the second pattern I said as well, that you have a break, test, goes up, takes the liquidity, and what did I say to you? Before you saw the example, the price went all the way up, right? But in this case, you can see the price broke, it retested, gave the retracement, broke to the upside, came back to the order block, and then boom, it made a new higher high. You see? So this is something that you can see all over again, everywhere, like literally everywhere. And the same things over here again. Look at this. This example over here, what happened? This order flow gets broken and taken out. And a lot of people will be like, oh, now the order flow is bearish. Okay, I'm taking the trade from here. Why? Because price has taken all this liquidity out. This is my order block. This is the order flow. And you get burned out. Why? Why you get burned out? Because you're looking M1 within M30, M50. So you shouldn't be doing that. So you guys see, this happens everywhere, every single time. So from now on, whenever you see someone telling you, oh, it's a smart money zone, and you don't know the answer to it, I can promise you, you'll know it. And I can promise you also that these people that are telling you smart money trap, they don't even know what they're talking about. Like I've seen so many of them saying smart money trap, smart. Yeah, it's very nice to saying after that happened, saying that this was a smart money trap, or this was smart money trap. But I can promise you that they don't know what I'm showing to you now, okay? And this is everything based on my experience and hours I've been spending every single damn day on the charts. Now I'm going to be showing you the last one. And this one, oh boy, this one is just so funny. This is the way they're scamming you so much, which is the last pattern. The pattern that I've been waiting for you to show, guys, once again. All right, where is it? Okay, this one over here. This pattern over here. This smart money trap is something that you're going to see all over social media. Everyone talking about it. Everyone talking about it. And unfortunately, this is something that I've seen from, as I said to you initially, from someone that I used to admire so much. But then when I saw him, the way he was showing this kind of stuff and he's trying to, upsell his mentorship, I got so much disappointed with him. Like so much. I mean, I lost literally, interest on him. And I'm not going to name who is it, whatever, blah, blah, blah. But again, it's just like, you guys need to understand that that is just BS, like big BS. Okay, so let's see if I can find that same example within the same price action. If not, then we're going to go somewhere else. So what exactly was that? Okay, that one is pretty much, let me see, because that's something that you need to see over. Okay, let me see. Let me zoom out over here. Let me see. Okay, let's see over here. Okay, that should be fine. Yeah, that should be fine. Okay, check this out. Now on this one, for example, look at this. So what do we have over here? So if I remove it over here, all right, somewhere, let's say, yeah, let's remove it over here. Then let's go to 5 minutes because I can already see from 5 minutes or somewhere. Okay, check this out. Here we have a lot of liquidity. Okay, you can already see there's a lot of liquidity. And then at one point, what happened is a price breaks to the upside, takes out liquidity, and then the next thing you know, price goes down, right? So it's going away, it's going down, very strong down. And then what happened is that you will see that a lot of guru telling you about is that people try to short from over here, right? Why? Because the smart money concept, we know that the very common pattern is that you have this equal highs, right? Over here, it comes down, it breaks to the upside, it takes the liquidity test, and then we're going away, isn't it? So now the same thing you have it over here. You got liquidity, you got all this equal liquidity, whatever you want to call it, takes it out, it goes down. So a lot of people will be taking a trade from over here. Now let me ask you this question. Wait 1 second, let's see what happened afterwards. So let's say you're taking the trade from over here, then you try to sell it all the way down, all the way over here because you may see more liquidity, and let's see what happened next. You can clearly see that you get burned out and price takes you out. Now, this is probably the biggest BS ever because when you jump on a chart, what is the first thing that you should be paying attention to? Is it your POY or is it your bias? So let me ask you this again. Is it your POY, which is this one, or you should be paying attention to your bias? I guess you should be paying attention to your bias. After you pay attention to your bias and you identify where the market is going, then you should be paying attention to POY. So I see a lot of these gurus and fake gurus telling you, oh, this is my money shop. A lot of people trying to sell from over here and they get burned out. Of course they get burned out because you don't have to pay attention to POY. So if I jump a smaller time frame over here, right, I can clearly see that as soon as price takes out this rally up, right, and it takes the liquidity over here and it breaks the trade in smaller time frame, you can see high, low, high, breaks, and you try to take the trade because now you know that liquidity has been taken, you will be burned out for a simple reason because you don't pay attention to the order flow. You don't pay attention to where the market is exactly going. And where exactly the market is going? The market is doing this, right? It's coming this, and then it breaks to the upside, right? And then it comes down and then it goes higher. So of course you will be burned out, and of course this becomes your smart money trap. Now, I need to find a very, very clean example, but literally that's what I keep saying on people all the time. Because you need to understand this. Again, the same thing that we discussed before. Just because you see price doing, okay, let's do this. Just because you see price doing certain things, like for example, price comes here, okay, and then it reacts away from this. Again, it tapped here, it reacts away from this. Then it goes higher, right? It takes out the liquidity, so it takes out all this equal over here. It breaks the structures over here and it comes all the way down here, and you try to take the trade. You shouldn't be doing that because you're taking the trade based on POY. You're not taking the trade anymore based on understanding the order flow. Why? Because if price is telling this going down and it takes this one out, this itself is telling me the price has broken the structure. Now, from this time frame, which is M1, you might gonna see this type of confirmation. But if you go M5, everything, all you're going to be seeing probably is just this. Simple as that. Okay? Don't overcomplicate it. Simple as that. That's what you're going to be seeing happening in M5 or M15. While in M1, that's what you're going to be seeing. Then, of course, people will be like, oh, I'm selling over here. Smart money trap because I see liquidity get taken out. Price breaks the structure, and then, oh, damn, it didn't play out. Of course it didn't play out because you're basing your narrative of M1 liquidity grab within your M5. And I'm telling you guys, you're going to see this a lot happening every single time. So I hope by now you guys understood why I was saying that smart money trap has always been there and people never realized it, okay? Because people, like this pattern over here, right? What do you guys think this is going to be? Of course it's going to be a smart money trap, exactly as I explained it to you before, out of the four patterns that I explained to you, isn't it? Now, if this breaks to the upside, and then we expecting what? A retracement internally, then if anyone is trying to trade from this order block, it will get burned out. But the fact that now people came up with inducement, because now this is the buy side liquidity, you got the sell side liquidity, whatever liquidity you got get taken out, people be like, oh, this becomes a smart money trap. So this is a concept that they came out now with the smart money trap, but it's always been there. If you understand it properly, like this one as well, it took out liquidity over here, right? It break to the downside, and everybody be like, oh, this is a smart money trap. It's not. It's not. Because for them, this is an inducement high that's taken the buy side liquidity, inducement low that's taken sell side liquidity, and then price is reversing. But in reality, all price is doing, right, is just following the order flow. So, it's quite funny, because if you understand how the market moves, which is like the very basic concept, is that price goes up and it goes down. It goes up, it goes down. There's no such thing that they can come up with saying, oh, there is this new theory, there is this and that. In reality, all there is about is just people using whatever concept existed before, but now seeing things from a different point of view. That's why I said to you previously that smart money concept has always been there, but nobody has ever paid attention to it. And now, because of this inducement, they needed to add this as a reinforcement to say that, oh, this is a trap for the smart money trader. Are you guys understanding what I'm saying? And the same goes for so many other patterns that are linked to the price action narrative and the price action construction. Now, I hope you guys understood that, because this is something, so from now on, every time that you guys see someone telling you about smart money trap and telling you, oh, what is in a smart money trap, what's going on, first thing first, try to see on the chart for your own understanding of the market if you can spot any of these 4 type of SMT that I just explained it to you step by step. Because I can promise you that 90% of the time, you're going to see at least one of these happening, all right? Because they fail to understand the importance of blending the different time frame narrative together, one. And secondly, another thing that I'm going to say, and this is something that I'm not taking it further now because I already made a video about it. A lot of people will tell you, oh, smart money trap is also Asian high, Asian low, previous day high, previous day low, weekly high, weekly low. Never ever take the trade from there, because there will be burnout as well. Honestly, that's another BS as well. And I can guarantee you that, because I have facts proven on one other video of mine, which is this one over here. So make sure that you watch this video over here to understand exactly what I'm talking about regarding the smart money trap, because I prove it to you guys. And then if you like the way I explained everything so far, you want to know more about the market structure and price action, then make sure that you watch the other video on my channel. I'll see you to the next.